What is going on, guys? Welcome back. Commentary for you. As always, link down in the description. Robinhood, you get a free stock. I get a free stock. Last month, somebody pulled a Microsoft share for us. Getting a lot of oil lately, though, and I'm not opposed to that. I think oil's a good short-term play. I think in my lifetime, the next 20, 30 years, you'll probably still see oil maintained. We're going to have trains and planes and even cruise ships running off oil. So I don't think it's going to be a short-term failure, although we all have to look at the future and know electric is coming. And, I'm invested in electric too, so I'm not overly worried. But man, what a crazy couple days, right? If you've been invested the past year or two, you can now say you've seen the ups and you've seen the downs, and we are not done. So 15% really the past 2 days. And honestly, the threat hasn't changed. And this is only, it's a small account, $7,000. Imagine if you were investing a lot of money. Going back and looking at what I talked about a couple days ago, you look at innovative industrial properties. I bought in at 53. In a matter of days, it's up to 72. I mean, this is like crazy swing trading levels when the threat is still here. The only thing that's changed is the fear isn't in the market because the government has pushed all this money in to influx people to feel safer. Medical Properties Trust, I bought at 1482, tempering myself in 1617. These are long-term holds for me. These aren't, short-term in and out. I mean, technically they could be. I did turn profit, but to me, I'm looking to hold these long-term. Another one that I talked about was Realty Income, massive portfolio. Realty Income in a couple days from 43 to 56. These are incredible entry points for some of these stocks. Not that I think this is going to hold, and that's what I want to talk about next. You have to look at where you're gaining and where you're losing and try to balance those out. I want to make sure that everything evens out. I'm going to try not to spend a lot on BDCs, but I also want to make sure that I'm shielding myself. And one of the ways I'm shielding myself is something I literally hate to do. This is against everything in my investment mindset is ETFs. I only own one other ETF. It's the MJ ETF, which is medical grass. And as soon as I can not lose everything on it, I'm going to sell back out because I've bought into innovative properties. So with that said, if you want to see why I fear ETFs, just Google Invesco ETF closure, and you'll see Invesco, massive investment firm, closed billions with a B, billions of dollars of ETFs last year. You don't have a lot of control over this, and obviously they're taking a percentage. Now, the other side of this is I can't afford right now, nor would I want to buy into every single company in this ETF. I guess I could maybe consider buying one share of each, but that doesn't do a lot of good for me. When I'm doing this, I'm giving myself the safeguard of there's going to be companies like I just showed you that are doing good short term and increasing their value. There's going to be companies that hold like Johnson & Johnson. I bought more today at 119. There's going to be companies like Ford that cut their dividend. I own 40 shares of Ford. It's been up and down like crazy. So I'm really protecting myself against that push of good companies are going to do good. Some companies are going to do bad. Other companies are just going to blow expectations out of the water for negative and positive. And when you have something diverse like this, you're not going to see that wild swing. I want you to notice this is the 3-month chart here. This is the 1-year chart. Okay, so look at how steady that was going from left to right. Now, obviously, we hit the cliff. Okay, and we may not be done with the cliff. I know a lot of people, just to be completely honest, if you look at this, and I said, do you see a bottom on this? A lot of people are looking at the past 3 or 4 days and seeing a bottom. That is a really, really scary thought process, okay? No one truly knows. It's easy, right? It's easy to look at this and say, hey, there's a bottom down there and we hit it, right? But the reality is, like we talked about, all this pumping of the market with funds from the government isn't resolving the issue that generated all this fear. It may be making people feel more comfortable and more willing to invest because they've got, a stimulus check or a bailout is coming, however you want to go about it. But the reality is the threat is still there. So please be very careful in what you're doing. And part of this, doing something I'm not generally comfortable with in buying an ETF, is my response to this. Because I know if I just put everything into Coke, right, which was low a couple days ago, and then Coke misses their guidance or misses their sales, then I could be, in a concern. If I put all my money into Realty Income and they just, shoot through the roof, well then great, I turned out, on the plus side of this. But you don't know which one is going to do which company is going to do bad. And right now, the most important thing to understand is they all have level playing field to do awful. Every company can do just as bad as the next. And you have to really temper where you are with that. So in buying into a stock like this, or really an ETF like this, number one, I get a monthly payer, which you guys know. Check my videos. Stag Industrial, I'm big into, even though I'm down on Stag, right? I like the monthly paying aspect because it puts money right back into my account to reinvest while we hopefully recover from this. And if we don't, while I continue to buy stocks at a decent value. And I'm looking back at a track record here where this stock was relatively stable. Now, is it going to jump right back up to the price point it was at before? Absolutely not. But do I feel like the companies in this ETF are prime to recover well and put me in a position to see this at $35 to $40 before the end of the year? I absolutely do. So, again, being mindful at my price points, buying in at opportune times. This actually just went ex-dividend, so, you had a bit more of a dip than you normally would, and trying to really temper what I'm doing in my investments around buying companies that I believe in when they dip, and then holding on days like this where, it's easy to look at up 15% and say, oh my God, I have to buy back in now. Everything's going back up, right? You have to be mindful that that's not the case. No one really knows, and be smart with what you're doing. I can go back and look at those 3 stocks that I bought last week and say, okay, I'm up, maybe $60, $70 collectively. I need to put all my money in these right now because they're going back up. The other part of me says, I don't want to do that because I want them to stay down. I hate to sound so cold-hearted, but I said earlier in the video, I have a small amount of money in this account, and I'm looking at a decent return, 15% in 2 days. Imagine if I had $100,000 in here. Imagine if I had $200,000 in here. I'm not done buying low, and the market is starting to pull back up. That's not the best thing for a long-term value investor. I didn't get everything I wanted to get at rock bottom prices like companies in terms of Disney, Pepsi. So for that point, know that you're going to probably see a lot of media talk about, oh, everything's recovered. Oh, look at the market. Look at these gains, the best days since the mid-90s. But just, guys, please be smart, okay? The threat is not over for all of us. The threat is certainly not over for these companies. There's going to be easily 2, 3, 4 quarters of really tough times, okay? Sales projections that misses, EPSs that misses, all kinds of things are going to happen in these companies, and they're going to dip again. Okay? So just make sure, if you ever listen to any of my advice, be mindful of what you're buying and don't trust when people tell you we've hit the bottom. We very well could have, and I hope that we have. I really do. I hope that we've hit the bottom, but I don't know that it's there. Okay? So with that said, obviously, if you bought into those stocks I told you a couple days ago, you're welcome. If you want to look at a way of safeguarding yourself a little bit, that would probably be in your best option. And here's the thing. The other side of this, if you are in a position to take gains, take gains. If you feel like after this you can't stomach it, that's fine. I wouldn't judge anyone that says, hey, I'm done investing after this. Take your gains and get out of the market if that's really how you feel. But I think the other thing we have to learn from this is, if you're putting money in the market that you absolutely need to live, you're making a major mistake. If you're putting money in that's not discretionary, that's not just excess money that you have, you guys know that the channel, the money that I make from this channel goes in to these investments, okay? It's not something I'm dependent on, providing for my family with or eating with, right? So if we learned anything from this as well, that needs to be a major, major takeaway. If you were just dumping all your savings in, you didn't have anything set aside for an emergency, and you watch all that money go down, I can't imagine the fear, the anxiety, the nervousness that someone would have while that happens. That would only make things worse. You're dealing with all this negativity in the media, then you're watching, actual money that you needed and have just get destroyed. So hopefully we can all learn from this, but I know long term, we can all gain from this. Okay? Yes, companies are going to go out of business. Yes, companies are going to struggle. Yes, companies are going to suspend dividends and hurt your bottom line. But for the greater good, have a deeper perspective of where we are and do things that make the most sense for you. That doesn't mean doing what I'm doing in some cases. In other cases, maybe you take my advice and follow through a little bit. But again, my best advice to you would be your own planner, do your own research, and do what makes sense for you, and it changes for every single one of you. Love to know your guys' thoughts on this. This may be the longest video I've done in 3 years. Appreciate you checking this out, and I will be back very shortly with more commentary.